What's going on, everybody? Welcome to a DeFi Da Vinci chart breakdown. We're going to go over a few pairs for you guys so that we can get ready for the week. And we're going to go over some of the news that we're going to see this week and how that will affect some of our pairs. And without further ado, we're going to let John start it off. So I'm going to make him the host. And there you go.
All right, let me share my screen really quick. So the first thing I want to look at, is the calendar for the week. On Sundays, it's important to understand what's going on, especially when you're looking at foreign exchange pairs. Jaden's going to take a look at a couple indice pairs. But when you're looking at foreign exchange pairs, you want to know what big news is coming out for the week for those countries. So what I'll do generally is I'll go to forexfactory.com. It's the easiest place to see what's going on. You can filter here. If you want to see some of the smaller news, you can see that there's a lot. But me, I'm only concerned with our red folder news. This is our high impact news for the countries that have news that week. So we can see on Monday, we have the ISM manufacturing PMI. This is the level of diffusion index based on surveyed purchasing managers in the manufacturing industry. So right here, it says that the actual greater than forecast is good for the currency. Gives you some more information down here. So generally, I really don't care what the news is. All I'm looking for is this right here. If it's greater than the forecast, is it good for the currency? Or if it's less than the forecast, is it good for the currency? So on and so forth. So we see that our reading right here, this is our projected 52.3. So if it comes out higher than this, that will mean that we're looking at a, what's the word I'm looking for? Positive impact for the currency. And then when we go into Tuesday, we have some news for the Australian dollar, a little bit more for the US dollar. This is kind of an important one for the US dollar, this job openings. This is the number of job openings during a reported month. We have employment change for the New Zealand dollar, the Swiss franc. We have CPI, which is the consumer price index. This is a good reflection of inflation in that country. So that'll be pretty big for the Swiss franc. We have the ISM service PMI for the US dollar. Great Britain's got a lot of news on Thursday. Australia's got some news on Thursday. And then on Friday, we have some news for Canada and more for the US dollar. This week is actually a big week when it comes to the United States because of this right here, non-farm employment change. This is NFP week. So the first Friday of every month, what they do is NFP. And what this calculates is the change in numbers of employed people during the previous month, excluding the farming industry. So in every industry other than the farming industry, we're going to see how much employment has changed in the United States. So right here, they're projecting a 250K change. If this is higher, you can see here, it's good for the currency. So what we're going to be looking for here is a big number when it comes to the non-farm employment change and also for the employment rate. We want this to be less than the forecast and this to be higher for the forecast to see some more bullish movement in the US dollar. Now, when I move into my chart, the first thing I'm going to look at is the dollar index. I mainly trade US dollar pairs and crosses, but I do trade some others. Mainly, though, it is US dollars. So when I'm looking right here, I'm looking at a big zone for the US dollar. So if you come here, you can see that this is my demand zone. This is where we're going to be looking to buy it. And we're sitting right in that zone. If we do come down past that throughout the week, I will be looking into more buying zones down here. But for the most part, I would like to see the US dollar push off of this zone. If not, coming down to here would be nice. Something I also look at is the MACD. We can see that we have some bearish volume starting to form. We do have a cross right here. So if you look, right here, we have this cross. Whenever this gold bar goes up and above the blue bar, that's indicating to me that price wants to continue moving lower. And then in combination with the bearish volume we're seeing, I can see this zone right here. I can see this zone right here being a zone that we push down to before Friday. So I do want to take that into account. We can let this play out through London and see what price wants to do. But other than that, we can kind of start moving into our other pairs. So I'm going to take a look at the Euro USD first. With the US dollar being a safe haven for most of the world and a lot of people in the United States, indices all over the place, the stock market all over the place, I'm very bullish on the US dollar. With inflation rising, every time we see those CPI numbers or the PPI numbers or our employment rates, we're seeing the US dollar rise consistently. And we're seeing other currencies fall compared to the US dollar. So I'm just going to start with fresh charts today. With the euro and the US dollar, I'm going to be looking at this supply zone up here. This is a zone where I'm going to be looking to sell at. We can see price has touched this zone multiple times in the last, 10 days or so. See that price? Oh, what is this, 12 days? Yeah, 12 days. So almost 2 weeks. Price has touched this zone multiple times. And we can see that price is starting to push back up to it. So now when I go back to the indice and I look at the dollar index, I can see the dollar starting to push down a little bit more. That tells me when I'm looking at the euro US dollar, where I see prices moving to the upside, and we see the MACD here, we have this cross of the blue line. Now over the gold line here, we have some bullish volume. That tells me that price wants to push up on the euro USD. So what I'll be looking for here is to start taking trades in this zone. And I guess for a stop loss, we'd probably, if I was to draw something out right now, we're not taking any trades right now, but if I was looking for a stop loss, I'd probably be looking somewhere inside of this zone right here, in between these two candles. I'd probably be looking for a stop loss somewhere up there. So we could take this down right here. This is a 2-to-1. We're risking 77 pips for 158 pips. We could even ride this trade down all the way down to here for 260 pips, which makes this like almost a 3.5 to 1 risk to reward ratio. So that's something I'm going to be looking at on the euro US dollar. And yeah, I mean, Jaden, do you want me to go into another pair, or do you want to go and then I can go over another pair?
Go ahead and keep your thing going, and then I'll jump in after.
Okay, bet. So the next thing I want to look at, I do look at all of these pairs, but the choppiness and sideways movement we're seeing, I'm not a big fan of them. But one thing I have been looking at is the euro Swiss franc. So if we come back here, we can see on Wednesday that we do have CPI data coming out on Wednesday. So this is going to be a big indicator of what direction this pair is going to go. So if CPI data is good, the Swiss franc is going to push up, pushing the euro Swiss franc to the upside. If CPI is bad, Swiss franc is going to continue to go down. And as you can see, the euro Swiss franc has been downtrending for quite some time now. So I will more than likely be looking for some sells here. So as you can see, we've got a little bit of a supply zone here that we're kind of sitting at. If you did want to be risky and get into a short position here, you could take something like this. If we pump out to the day, see we have some price over here. Come back to the hour. You could take something like this with a small stop loss of about 30 pips with a take profit of about 80. So that's a good risk to reward. You're close to 3-to-1 there. If you did want to take this, you do have a small stop loss, so the risk is minimal. 80 pips is not bad when you're looking at foreign exchange pairs. So this is a trade you could take. But personally, right now, I do want to wait till Wednesday to get into this pair. We could see price trend higher up into this zone here, where we see another demand zone or supply zone, I'm sorry. And if price does move up here, I will be more intrigued in this pair and more likely to look for a sell on it. Kind of scrolling through here. I don't really want to trade these US dollar pairs until we see what happens on Friday, other than the Euro USD. But looking at the USD JPY, price could continue falling. We don't have too much structure built here for me to take any trades. USD CAD, same thing. We've kind of got this sideways movement. Price is kind of trending this way instead of up or down, so I'm not really a big fan of that. I know Jaden's going to look at GBP, JPY. Honestly, same for all of these. I'd like to see price really start to, so if I was to look at the New Zealand dollar right here, I would like to see price break up above these zones here. I like to see price do something like this before I get into any trades. Now that's if I'm looking at a long. But personally, I would like to see the US dollar push higher, pushing the New Zealand dollar more to the downside. And with us trending higher on the New Zealand USD pair, in the sideways moving we're seeing, I really don't like that look at all. Same with NZD CAD, we're moving very sideways. NZD JPY is starting to look nice. We've come up towards a bottom here. And if we do see price reject off of this, I would like to see price come into this zone up here, break above this, and then trend back down and then continue trending to the upside. But with the looks of things over the last, let's say, 10 days, price has been trending down. So personally, I'm not going to be looking to try to catch the reversal. I really want to try to trade with the trend. And then USD CHF, which is the Swiss franc, same thing here. Price has been trending down for a while. When you come back to the DXY, and honestly, it's almost the exact same chart. We see price trending down. I would like to see price come down to here before we make any initial moves. So for right now, really my two main focuses are the Euro US dollar and the Euro Swiss franc. But we do have to see some continued movement before we start to enter any trades. So yeah, so that's where I'm at with what I'm looking at for the week. Jaden, if you want to take it over, I can stop sharing my screen and then I'll make you host. Which you want the one that's not your camera as host?
Yeah.
I bet. Okay, you should be host now.
Cool. So I think it's really cool that we're able to give you guys two different market perspectives, because John and I trade similar but not the same. And a common misconception about trading is that it's a zero-sum game, which in some sense it is, some sense it's not. Zero-sum meaning, like, for example, poker, you know, for somebody to win, somebody has to lose. But you know, John is a more of an intraday trader looking for trades on the hour time frame, where, like, if you were to take his setup, it doesn't necessarily mean that if he was looking for sells and I was looking for buys, either of us are wrong. So we're going to start off with US 30. I'm going to clean the charts up. And then we're just going to start from the daily, just because even though I'm a scalper and I don't pay too much attention, I like to see if we're at any key levels on the higher time frames, because we'll start seeing reversals off those levels. So as I'm seeing here, we have a big drop in price after this big bull candle. And that just tells me that the institutions got in for buys to manipulate price and tank the market. And so what we're going to have to see is price come back up and mitigate these prices so that they can get out of the buys that they put in the market to fake out all the sellers. I mean, all the other buyers. So currently we're at a price where the market could reverse, but I'm just going to label this one up here, even though this might be in a couple of weeks. And I typically like to label my zones that I would be selling off of in red. All right, to the downside, we see that price kind of accumulated here. And so even though we have been uptrending for a long time, over the last few weeks and months even, we've been in a pretty significant downtrend where price was, where the trend was broken to the downside. And so like John was saying, you kind of want to keep trading with the trend. So I'm not, over the last few weeks, we've been trading US 30, NAS 100, and the S&P a lot, and we've pretty much only been selling it. There has been days with the news will buy it, but for the most part, we are riding this downtrend. So I will be looking to short from this area, but let's drop timeframes and see what we can get. So if we just skip all the way to the hour, we can see that we have been in a bullish trend. I like to connect my trends wick to wick. And so the only way I'd be looking for sells is if I start to see a reaction off of this zone we were talking about from the higher time frames. You can hear me all right, John?
Yeah, I can hear you fine.
Okay. So this is where I will start looking for those patterns that you're taught in Forex 101, where you might see a double top pattern or a wedge, just any sort of bearish pattern is what I'm looking for, maybe a head and shoulders, anything that's going to start showing us that momentum to the upside is slowing down. And so we might start seeing something like where we get a double top and then price might break structure here. And this leaves liquidity to, meaning like there's sellers stop losses up here because everybody is seeing that this is a major zone that people are, they could sell off of. And so they're going to try and manipulate price to get the sellers out before actually dropping the market. So what we might see here is price come break structure signaling that there is a bearish bias now, and then price might shoot back up off of this previous order block where they sold to buy. So we might see something like this. And then we'll see a nice like bearish engulfing candle somewhere up here or an evening star pattern somewhere up here. And that's going to be the footprint telling us that the institutions have gotten in and they've changed their bias and they're going to the downside now. So that doesn't necessarily mean we need to start selling off in this move, because what they're going to do is leave us a perfect entry somewhere within here. So what we're going to see is a mitigation candle just like this, but to the but opposite to the downside. We'll see a candle where we'll have a significant amount of buys in, but then the market will tank right after that. And so we can label that candle with our sell box on a smaller time frame, and I'll like do a slightly different color so I know it's a smaller time frame, and I'll maybe do the higher time frames in a darker color. And then all we have to do is just set a sell limit right at the box and put our stop loss above the candle, and we can target either the low, or if we're going to turn this into an intraday trade, then we can zoom out on other time frames. I forgot we're on the hourly right now though. So this is what I'm going to be wanting to see on a smaller time frame, like the 5-minute or the 15-minute, before I actually start looking for entries. But it will, the thing about the market is they're fractal. So we could see this same pattern happen on every time frame. And the more times you see it, the more confirmation you have to take the trade. We could have the double top happen right in here. And then the same pattern where price drops, breaks minor structure, comes back up and takes out these buyers, and then tanks the market. So that's kind of what I'm looking for US 30. Pay attention to money talks and our live trades as we'll kind of assess this as price unfolds. But that's what I have for US 30. We don't have much time, so I'm going to quickly go over GBP, JPY. We'll start on the daily just to see what we got going on. So we're in a big consolidation range, but we have been uptrending for the longest time. So we are looking for buys overall. Doesn't necessarily mean we won't scalp some sells in the New York session or something like that, but we see that price is heading towards a pretty significant support level. Price reacted here, here, and here, and then when it broke, it reacted here, and so we might see another bullish move off of this where we have the trend and the zone meeting up. So once price gets to there, I'm not looking for any trades until price gets to there. That's why, like, you have to be patient about these markets because, you know, there's so many trades you could be taking in here, but they're not high probability trades. The high probability are the ones that you're getting all these confluences on the higher time frames and then getting down to the lower time frames for your entry. So what I'll be waiting for, I might even set an alert right here. And if you have it on your phone, you'll get the notification on your phone. Once price comes into it, I don't just automatically buy. I will wait for that same pattern that I was talking about on US 30, but on the opposite. So we might see something like this. Might see a double bottom, price break structure, price come down and take out the sellers, price shoot up, break structure again. And then come right back. Oops, what happened?
Hit Control Z.
Control Z. Oh, okay. And then, like I said from before, once this pattern happens, it will show us a significant mitigation candle, a nice sell candle before the dramatic buy to the upside, leaving us a perfect footprint for us to get in. So you can either set a limit order once this pattern unfolds right here, or you can wait for price to get to there and then show some type of reversal candlestick pattern like a morning star or a bullish engulfing pattern. But other than that, I think you guys are pretty set up for the week. We will be back on Sunday to do this again, but I hope you guys enjoyed.